What's up, guys? Today is Saturday, March 15th. Today I'm going to be going over sponsored and unsponsored highs and lows, as well as protected versus unprotected highs and lows. So, the first thing I want to get into is what is a protected versus what is an unprotected high or low. The first, most obvious, I'd say, protected high or low is a high that has an SMT. The SMT divergence, especially if it's within a high time frame PD array, like I've talked to you guys a lot about before, if it's in like a high time frame fair value gap, order block, breaker block, or with like significant liquidity pools, those are the SMTs that will really help you catch reversals, know when reversals are going to happen, know when the sentiment of the market has changed for the day or for the session. But SMTs are, I don't trade unless there's an SMT. I don't know many other traders that do that, but it's my requirement for every single trade. And I've noticed that the trades that I would have taken without SMTs often fail, and then they give me another entry with an SMT. So I just wait for the SMT, and if I don't get one, I don't take the setup. Simple as that. Another example of a protected high or low is one that trades into the midpoint of a fair value gap. Once a fair value gap is rebalanced, we no longer need to see price trade back into that. And a lot of times when we first tap into a fair value gap, we'll get a really slight tap into it, like a dollar or a few ticks, and then we'll go soup that high and actually fill the imbalance towards the middle point of the imbalance. So if a high reaches into a fair value gap and fills it up until the midpoint, which I'll go over what that is right now, it is a protected high or low. So let me give you an example here. So for example, right here. So this is a fair value gap. This is the one I'm choosing to use. And equilibrium of a fair value gap is the 0.5 fib, or just the 0.5 level. So as you can see here, we didn't necessarily trade into equilibrium of this fair value gap. So this would not be a protected low. And you can see that this low does end up getting swept out further into the day. So for example, this low right here. You see it perfectly fills this 15-minute fair value gap. It fills it way more than just the necessary 50% point. This would be the equilibrium of the fair value gap that I was talking about. So this would be a protected low. So another example of a protected high or low is when the market gives us a 3-drive pattern. And what this is when the market sweeps the same internal high 3 times, and that I don't pattern trade this, and I really don't utilize this in my trading as much, but I know some traders do. But let me give you an example of what that would look like. So here we see New York AM puts in the swing low. We take it out once again, put in the swing low, and then take it out again. So this would be a 3-drive pattern. When you just see a swing high get taken out, or a swing low get taken out, another swing low form, and that swing low get taken out as well. That'll be a 3-drive pattern, and that's how you can know that this low will be protected. And you can see here, price trades closely into this low, but does not quite invalidate it. Okay, now let's move on to some examples of unprotected highs and lows. So honestly, most highs and lows that you see are going to be unprotected. It just really, no matter what time frame you're on, the 15, the 5, the 1 minute, the markets are fractal, so it really doesn't, you don't really have to think that deep into it. This all applies to every time frame. It really just depends on your trading style, your strategy. This works with day trading, swing trading, like monthly swing trading. It really is just all up to you. But unprotected highs and lows are highs, lows that aren't really inside of anything, any high time frame PD arrays, like FVGs, OBs, breaker blocks. So a lot of times you will see this at all-time highs when we don't really know, we don't have data to kind of know where the market's going to go. So if you see us put in a high, it won't be protected unless there's an SMT there or unless it fills a fair value gap. But all-time highs is really when you see the most unprotected highs and lows, and that's why a lot of traders, especially ICT traders, choose not to trade all-time highs. But yeah, honestly, unprotected, there's really not much more to go over, but it's just pretty obvious. Highs, lows that aren't bouncing off of anything significant, aren't reacting off of anything significant, they're just kind of there. Now let's move on to sponsored and unsponsored session highs and lows. And this is actually one of the most important, I'd say, parts of my trading for my daily bias, because the first thing I do when I hop on the charts every morning is I go I start my top down analysis, the daily, the 4 hour, the 1 hour, 15, 5, 1 minute. And when I'm on the 15 minute, I have this indicator that I recommend for everybody to use. And no, it is not a buy and sell indicator. Don't worry. It's this ICT kill zones and pivots by a TFO, I believe. I highly recommend everyone to put this on their chart. What this does is it shows you every session of the market, like marked out. Here we can see that New York AM session's marked out in its own box. We have Asian session marked out in its own box. And these lines that it leaves are the session highs and lows. So when I first hop on the charts, we'll pretend that today would be Friday AM and I was looking for a trade. So the first thing I like to look at is Asian and London lows and highs. I want to see if they were swept. I want to see if they traded into anything significant, and I kind of use that to not really form my daily bias, because a lot of times, like, you will have, not a lot of times, but sometimes you will have like unprotected or unsponsored London lows or Asia lows, but the whole daily bias is going to be the complete opposite of that, and so you can't really rely on daily profile, but it's still something I pay attention to and still, I'd say, like, worry about every day. It's still something like I care about. But what a sponsored versus unsponsored high and low is, so we have Asia low here and Asia high. To figure out if it's a sponsored low or a high, I want to see if we traded into a 30-minute or higher PDO rate on either the low or the high to know if they're sponsored. In this case, if we were looking at this in Friday AM, both the highs were already taken out. We just have the lows resting below here, so we would only really worry about the lows being sponsored. Here we can see the Asian low traded into this 30-minute and probably an hourly, but I'm not going to go on the hourly because it's already sponsored. So we can see Asian low sponsored. We don't need to trade back to that. Here we can actually see that London low traded into this 30 minutes, so it would also be sponsored. And I know on Friday, I'm pretty sure my bias was bearish towards London and Asia lows, but that's just because before market open, we had just swept this, had this reaction, and have all of this LR built up below. So I was expecting us to trade lower and actually take out London lows at least, but we did not end up doing that. So it really is that simple. You just need to see if the session traded into a 30-minute or higher fair value gap, order block, or breaker block. And if it did, then it's a sponsored high or low. And let me just go in the 15-minute and give you guys some more examples, because this is really like the main point I wanted to go over today. Let's look at this day here, for example. This was Wednesday night going into Thursday morning. You see we have Asian highs right here. Don't see it trading into any 15-minute fair value gap. Let me look at the 30-minute. So no, in the 30-minute, we don't have anything either. You can see we're just chopping around this range. So on the 30-minute, we did not trade into anything significant. On the 1 hour, on the 1 hour, does not look like we traded into anything significant either. So this Asian high would not be sponsored. This would be a good target to have coming into the next morning, but it looked like we were just dumping for the rest of the day. And also, if Asian or London session lows or highs are swept before you hop onto New York to trade, then you don't have to worry about them. They've already been reacted with, interacted with, so you don't need to expect the market to trade higher into them.
What do you use the sponsored or unsponsored for? If it's sponsored, is that
daily bias? When I hop on
retrace and sponsor something?
When I hop on to look at like daily bias, when I hop on in the morning, I just go do my top down analysis. So daily, 4 hour, 1 hour, 15, 5, 1 minute. And then I look in the 15-minute. I have the sessions indicator, and I look at, well, I really don't look at any sessions that are like outside of the current day. So like if today was, for example, Friday, I would only looking about like London and Asia Friday. Yeah. So I just see if they traded into a 30-minute plus PDO rate, the higher low of the session. So let me show you an example here. So here, like when we go in the 30-minute, this could be any, like, it could be a 30-minute, it could be a 1 hour, 4 hour. Daily is not the best really time frame to look for sponsored moves because that's just too big for day trading.
Yeah, just 30 plus.
Yeah. But see, Asia low, this is where Asian session opened. This is the low of Asian session. It traded into this 30-minute right here, so it's sponsored. This high did not trade into anything, so it would be unsponsored. This low traded into this 30-minute, or no, this 30-minute, so this would be sponsored. And if it's unsponsored, then I can expect, like, say this didn't trade into the 30-minute, and I mean, I was overall bearish on the day anyway, but it kind of just gives me like more targets. So say like this was unsponsored and I was coming into the day, I would be targeting London lows. Like I would want to see London lows get swept. If they're not sponsored, you basically
Okay,
expect
so
it to get swept in the session. A sponsored low or high, you don't expect the market to trade back to. If it's unsponsored, you expect us to trade back to it.
oh, okay, that makes sense. Yeah, because a lot of times when you said sponsored or unsponsored, the un kind of cut off. So it's
Hmm.
kind of like a lot of, but yeah, yeah, okay. So the unsponsored are good draws in liquidity, and if they're sponsored, it's kind of like trading against like equal highs or lows. Like you
It's
don't just
you.
trade
You don't want
against
to
them.
pattern trend this. This is kind of like something I just keep in the back of my head when I'm trading, and I always just have them
For
marked
sure.
out. But it's not like, oh, this low or high isn't sponsored. That's the only target I'm gonna have for today, even if the whole day's price action tells me otherwise. Like, no, I don't trade it like that.
Yeah, yeah. It's just like if it's also aligned with red, the rest of your buys is just a plus.
Hmm.